Greetings, financial explorers. Ever pondered the intricacies of Bitcoin and ETFs? Today we're diving into a topic that's been making headlines, the newly approved Bitcoin ETF. On the 10th of January 2024, the US Securities and Exchange Commission, or SEC, green-lighted the first ever Bitcoin exchange-traded fund, a landmark decision that has sent ripples throughout the financial world. But what does this mean for both retail and institutional investors? Well, in a nutshell, this approval signifies a major shift in the way Bitcoin, and, by extension, all cryptocurrencies are viewed and handled. It provides a more accessible and regulated platform for investors to get involved in Bitcoin without the need to directly purchase and store the asset. Now, let's draw a parallel with an asset we're all familiar with: gold. Gold ETFs have been around for quite some time, offering investors exposure to the gold market without the need to physically hold the precious metal. Similarly, a Bitcoin ETF allows investors to gain exposure to Bitcoin's price movements without the complexities of handling the digital currency directly. But here's where things get interesting. Bitcoin, unlike gold, has the potential for significantly higher returns. It's no secret that Bitcoin has been known for its dramatic price surges. This new ETF approval could potentially drive the price of Bitcoin to unprecedented heights. But remember, with great potential returns comes great risk. The volatility of Bitcoin is extreme, and investors should approach with caution. So, what does the crystal ball say for Bitcoin and cryptocurrencies in the years to come? Well, while it's impossible to predict with absolute certainty, many financial analysts believe that the approval of the Bitcoin ETF could push Bitcoin's price to new record highs by 2025, and potentially even further by 2030. However, it's essential to keep in mind that the cryptocurrency market is highly unpredictable and subject to regulatory changes. Investing in a Bitcoin ETF, while potentially lucrative, should be approached with a keen understanding of the risks involved. To wrap up, the approval of the Bitcoin ETF by the SEC is a significant milestone in the cryptocurrency world. It provides a more accessible and regulated way for both retail and institutional investors to gain exposure to Bitcoin. While it shares similarities with gold ETFs, Bitcoin ETFs offer the potential for significantly higher returns, albeit with a higher degree of risk due to Bitcoin's extreme volatility. As we move forward, the landscape of cryptocurrency is set to evolve in exciting and unpredictable ways. Always remember, knowledge is your best tool in this ever-changing financial world.